Weekend of August 4th to 5th, 2025, an objective analysis covering macro influences, BTC, ETH, XRP, Solana, and significant altcoins. Macro and market context, the data-driven landscape as we approach early August, the atmosphere is one of cautious optimism. The July PCE report, released August 29th, disclosed a plus 0.3% month-over-month increase. The headline reported a 2.7% year-over-year rate, while the core rate stood at 2.9% year-over-year. This outcome matches expectations, preventing the Fed from adopting a hawkish stance, yet not soft enough to prompt rapid cuts. Powell has emphasized that the Fed remains data-driven, making every upcoming jobs or inflation report critical. The second major influence is market flows. Throughout August, Ethereum ETFs attracted billions in inflows, whereas Bitcoin ETFs experienced net outflows. This shift has positioned ETH as the beta leader, with Sol and XRP also reporting positive ETP inflows mid-month. Overall market sentiment appears delicate. In the first week of August, BTC could not maintain the $115,000 level amid liquidation-driven selling, while altcoins like Sol and Doge displayed relative strength. Low liquidity over the weekend leads to rapid, headline-sensitive shifts, yet structural flows suggest a collapse is unlikely. Takeaway: macro conditions are neutral, while flows are constructive but shifting. Prepare for two-sided trading, with ETH and Sol emerging as leaders, anchored by BTC. Technical analysis, levels, momentum, and moving averages. BTC remains confined within the $108K $118K range. Resistance, $117K $120K, a supply zone that consistently rejects. Support, $108K $110K, this floor has been defended multiple times. Should it fall, liquidity exists at $105K $103K. Indicators indicate a daily RSI in the mid-40s, a flat MACD, and light volumes. Trigger criteria: bullish signal, a daily close above $118K $120K driven by spot demand, target $123K $125K. Bearish risk: dropping below $108,000 suggests a likely dip towards $105K $103K. ETH surpassed $4,300 on August 11th and maintained its position. Support, $4.3K $4.5K, 20-50-day cluster. Breakout zone, $4.85K $4.95K. Indicators: RSI positioned mid-band, MACD shows a flat to bullish trend. Trigger criteria: bullish, a daily close above $4.85K $4.95K opening the path to $5.2K $5.5K. Risk: a fall below $4.2K $4.3K could break the summer channel, allowing sellers to dominate. XRP, it continues to oscillate within the $2.8 $3.1 range. Resistance, $3.07 $3.20, multiple rejections with low volume. Support, $2.84 $2.90, below, there's a safety net at $2.70 $2.60. Trigger criteria: bullish, a high volume close above $3.10 $3.20, a trajectory towards $3.30 $3.50. Invalidation, a close below $2.70 signals a bearish breakout. Solana, the uptrend remains intact, with buyers defending the $195 $205 zone. Pivot, $213 $217, breakout resistance, $245 $250, several unsuccessful attempts observed. Indicators are neutral on RSI, MACD is flat, volumes are moderate. Trigger criteria: bullish, a daily close above $245 $250, targets range from $260 $280, then assess for $300. Risk: a close below $195 $200 suggests a likely test towards $180 $190. Fundamentals: underlying movements. BTC continues as the institutional anchor through ETFs. The August sell-off was due to positioning and profit-taking, not a narrative shift. ETF demand should cushion any dips. ETH, attracting multi-billion ETF inflows alongside strong usage, stable coins, staking, tokenization. This momentum keeps testing the $4.95,000 resistance. XRP, legal clarity and ETF eligibility underpin the medium-term outlook. While the flows remain positive, a breakout is essential to draw on momentum buyers. Sol, Developer growth and institutional ETF prints, $145 million single-day inflow mid-August, support its position as the institutional altcoin, but the $250 level presents significant resistance. Sentiment, cautious yet opportunistic market participants have termed this phase the show me period. Investors are seeking confirmed breakouts rather than promises. BTC's dip below $115,000 unnerved some, but enhanced flows in ETH and SOL improved overall sentiment. Current narratives are, BTC, reclaim $118,000 or consolidate. ETH, flows support upward movement, wait for confirmation at $4,950. SOL, watch for a breakout above $250. XRP, aims for $3.10 plus backed by volume. Actionable playbook, buy, sell, wait Bitcoin. Consider buying only if a daily close exceeds $118K, $120K, targeting $123K, $125K. Remain patient within the $108K, $118K range unless short-term scalping with tight stops. Hedge or reduce holdings if a close occurs below $108,000, likely testing $105K, $103K. Ethereum, buy on dips between $4.3K, $4.5K provided the reclaim is swift with spot-led strength. Increase positions if breakout occurs above $4,950, targeting $5.2K, $5.5K. Exit position if close falls below $4,200. XRP, consider buying only if the price surpasses $3.10 accompanied by volume, targeting $3.30, $3.50. Avoid trading within the $2.84, $3.10 range. Cut losses if falling below $2.70. Solana, buy when exceeding $2.45, $2.50 supported by spot-driven momentum aiming for $2.60, $2.80. Accumulate between $198, $2.05 only if BTC and ETH display stability. Step away if the price drops below $195. Altcoins, limit speculative exposure to 5% until BTC surpasses $118,000 and ETH confirms above $4,950. Favor liquid L1s and revenue generating DeFi, steer clear of low cap meme pumps in thin weekend liquidity. Risk triggers, potential shifts in outlook, macro shock. An unexpected jobs or inflation report could alter Fed expectations, triggering a volatility spike. Flow shock, if ETF inflows reverse to outflows, particularly ETH, rallies may lose momentum. Market structure, high leverage amid low weekend liquidity could create sharp price fluctuations at BTC's $118,000 or SOL's $250 resistance. Disclaimer, this content does not constitute financial advice, and I'm not your financial advisor. The cryptocurrency market is volatile and entails the risk of total loss. Conduct your own research, manage risk, and always utilize stop-loss orders.